Thank you for joining us. We're Anderson Griggs Investments, and today we're going to talk about dealing with overconfidence. You know, we're all human, and a lot of times we kind of think that we're better, we're smarter, we're stronger than the other person. And this can be a problem when it has to deal with investing your savings. It's a human factor, so we're able to laugh at it. A lot of times, bravado amongst friends. Oh, I'm the best poker player. But like I said, this can actually hurt the bottom line. It can hurt your future because it's your family's dollars you're dealing with here. So when we look at that, it's kind of hard for us. We're investment professionals. It almost has to run in the blood. It's hard to make decisions on your own money. It's hard to make decisions on other people's money. If you don't have the confidence to do that, that also will be bad. So we always have to realize there's a line here that we're trying to keep into perspective. And to do that, what we've done here at Anderson Griggs Investments is we have actually created rules. So rules for managing our clients' money. The easiest way to think about this is when we look at all the investments out there in the globe, because it's a global society, we want to make sure that we have proper representation. So we want to make sure that we don't feel we're so smart that we're going to get out of the energy sector altogether. We're not going to invest in energy companies because we don't think the future is right. We want to make sure that we have an investment in that area because when growth comes, it comes before any of us can really realize it. So we do that by limiting our investments to size. There's small, mid, and large companies. Most people are familiar with that. Their mutual funds and their 401ks, they'll have the option to choose between those. So we want to make sure we have representation between those sizes. We want to make sure we have representation in the various corporate sectors out there, such as energy, utilities, financials. We want to make sure we understand what the sizes of those sectors are and make sure we have adequate representation. And then also geography. Now, we don't feel that you should be invested in every single country that has investment options out there in the world all the time. However, you need to realize that a lot of times we suffer from home bias. So we'll only buy American. That's even a saying that you hear, Trump, etc. Buy American. You want to make sure that there is growth opportunity out there, and you need to be able to put yourself in the position to actually experience that growth in your investment accounts.
That's correct, Justin. Where we take risk, we want to take risk in the areas that we can personally control. And of course, when it comes to buying any investment, there's only two options. One is you can control the time and the price you pay for something or invest in an individual security, or for that matter, lend your money to the bank or to the bond market. The second is you can control the price you'll sell that particular investment. Both of those represent a value orientation. We need to, prior to purchase, determine or calculate what we would consider a fair value for any investment, be that a bond, a certificate of deposit, or an individual stock. At the same time, we need to compare that to what we believe the future value will be. The reason you put in the rules that we put in is because no one can tell the future. There's always going to be mistakes, but we want to kind of put the odds in our favor and be able to participate in the rise in common stocks, or for that matter, the decline in interest rates, or simply a payment stream that allows us to benefit more often than when we're wrong.
And one final thing, and this is an error I see a lot of people have, it's putting too much into any one single investment. We limit the amount that we'll allow to be in any one investment here, but a lot of times I see people, if you don't understand the market, but you read the news and it sounds like small companies are going to benefit from Trump. So what they do is they put 20% of their investment portfolio in small companies. That is a huge bet for such a small representation of the world's investable assets. So you need to understand the market and limit how much you put in any single one investment, because at that level, one investment can really do your future harm. Thank you for joining us.